With us today, live here on Business Today Television, Sunil Singhania, founder of Abacus Asset Manager LLP, our market master for the week. Sunil, welcome to the show. A happy Independence Day to you. And as we start on that note, let's take a big macro view first before we dive deep into the markets. India, many reports over the past several weeks and months saying that the country and the economy is in a great spot, a Goldilocks spot. We know what is happening to interest rates, and we are also seeing the return of FIIs into the Indian market. Sum it up for us. How is the big picture view of the Indian economy and the markets?
First of all, happy Independence Day, Siddharth, Sakshi, and all viewers at Business Today. It's a pleasure to be on the show. So I think from a macro point, which is what you mentioned, first of all, Siddharth, what you have to look at is 2022. The world generally, across economies was debating whether there will be a recession or a 0% growth. In India, the debate was whether there will be a 6% growth or a 7% growth. And obviously, we know which debate is a better debate to have. And I think India managed to grow upwards of 7% in a very, very tough global macroeconomic environment. As we speak, I think 23 and 24 across the board, large agencies like World Bank, IMF, and so many other global research outfits have all said and forecasted that India would be among the fastest growing economy in the world, and they will grow at like upwards of 6.5%. So I think there is no doubt that the resilience which the Indian economy has shown over the last 2-3 years of challenges, led by COVID and then the Russia-Ukraine issue and wild swings in commodity prices, and as a result of which highest ever inflation and interest rate is very, very commendable. And we basically attribute that to what we call the 4Ds. One is obviously democracy. I think the world has realized after the conflict of Russia-Ukraine and the potential threat of conflict leading to China that democracy is the place to be in. The second is obviously demographics. I think we are one of the youngest large economies with a median age of less than 30 years. And at least for the next 20-25 years, our median age is going to be less than 35 years, which make us one of the youngest large economies in the world. I think third is the digital economy. I think we have lagged a little bit in terms of physical infrastructure. There also we are making big strides, but I think what we have lagged in physical infrastructure, our digital thrust has made good a lot of it. So efficiency has improved, connection has improved, tax compliance has improved, and generally, I think as an economy, we are becoming more and more efficient. And the last T would be the domestic consumption. So the reason why in 2022, when the world was struggling, India managed to grow at 7% is because, more than 80% of our economy is domestic driven.
Correct.
And we have seen how we have celebrated festivals and weddings and how we have traveled, at a time when the world was actually struggling. So I think all this put together makes India stand out quite a bit. And on top of it, we also have oil, which has been on a softer side. Yes, in the last month or so, it's moved up $10, but still, even at $80, we are almost 20% lower than the last year's average. And I think that's a big, big positive. We also noticed that the world obviously is moving from dragon to elephant, which is China to India, not in terms of only manufacturing, where the China plus one and all the incentive which the government is giving, plus all the steps they are taking, including the recent step of banning imports of laptops and computers and encouraging them to be made in India. Along with the huge flows, the asset allocators are also looking at India as a country where they would like to increase their exposures. So I think all in all, in terms of macroeconomy, in terms of the policy decisions, in terms of the world looking at India as a great place to invest, as you rightly said, it's all Goldilocks. But yes, we have seen this, that you should not get carried away. We should be sane. So I would say that things are good. But we have to obviously keep on watching our steps.
Absolutely. Mrs. Singhania, I wanted to understand this itself. You said that, the things are good, but we want to know whether it can get better from here for the Indian markets. Last week or 10 days or so, we've seen some correction come in after we reached those record high levels. How Siddharth also mentioned that 20,000 or 20K amount still looks elusive as of now. But where are the markets headed according to you? Do you think that in the short to medium term, we've already made that top? Or do you still say that, bulls are just going to be taking a breather, they will be back and we will see higher levels?
So, Sakshi, the markets always have their own, I would say, gate, their own way of moving. So if you see, January we started Nifty with 18,500 as the index. So from there, actually, we are up only 6%, 7%. It's not that we are significantly higher over the last 8 months. The only thing is we fell to like 16,500 at the Nifty level in March. And from those levels, we look at 20% rise and we believe that, markets are all over the place in terms of moving up. Yes, there are some segments, the smaller companies which have just gone berserk. But I think overall, if you actually see, we are much cheaper than what we were in October 21. So in October 21, when we were 18,500 as far as Nifty is concerned, we were trading at like 25 times 1 year forward. Now at 19,500 and with Nifty earnings expected to grow 16, 17% for the next 2 years, in terms of EPS, we are looking at somewhere closer to 1,060 to 1,100 rupees of EPS for Nifty for FY25. And on those valuations, which are lower than 19 times, FY25, which is 10% premium to the long-term average. So it's not crazily overvalued. Yes, there is slight, I would say 10% premium to the 10-year average, but we are not completely out of whack. The other thing is in the near term, obviously, the result season has been pretty okay. There have been good numbers from some sectors. There have been some headwinds for some sectors. But I think overall, we are heading into at least the next, I would say the second half of FY24 as a period of great optimism. This time we have the festival season, which has got deferred by a month. But the way the monsoons have progressed and the way the environment is building up, both in terms of consumption as well as infrastructure spending, we are pretty confident that the year should end up well. Markets in the very near term, frankly, I don't have any guess estimate. It's good that they have cooled up. Last 1 year, the markets have gone nowhere. I would be more than happy if the same trend continues at least for a couple of weeks more. We need a little bit of a breather, a little bit of cooling off. But I think the optimism from a 3-4 years perspective remains as positive as it was ever.
On a sectoral basis, Sunil, where's the potential for scaling higher? What do you sense on the ground?
So, obviously the good thing about Indian economy and the markets are that we are pretty diversified. So, unlike Brazil, which is predominantly commodities, or Russia, which used to be predominantly oil and gas, and China, which is now predominantly government companies or government controlled companies, I think in India, we have everything. And, obviously that makes the economy and the markets also more resilient and also gives a lot of choices for investors. Having said that, I think the financial segment continues to be doing very well. I think stocks are not very expensive. Prices have moved up, but profits have moved up even faster. And therefore, our view is that from the next 2-3 years perspective, financial should continue to be a good sector to hold on to. I think obviously pharma has made a comeback. It's a good sector, particularly the domestic focused pharma. The only thing is, pharma, you can't take a bet from a sector perspective. Company specific fundamentals are very, very obvious because, you have the regulatory issues and you also have some specific drugs which these companies keep on getting approval about. So it will be more stock specific. We are in a small sector, steel. We are quite optimistic. Our view is that companies' balance sheets are spick and span. And, the outlook, both from a global as well as domestic demand perspective, seems to be quite robust. I think consumption, particularly the discretionary consumption, we are quite positive from a 3-4 years perspective. So that would include building materials and so on and so forth. The only thing, again, there's company specific valuations are very important. But I think from a trending perspective, the fact that, right now 1/3 of the Indian population has income levels where they can afford some want, but this 1/3 is going to go to 2/3 maybe in the next 8-10 years. So in almost 2/3 of the Indian population would be in a position to afford some bonds. So I think discretionary consumption should be a great sector. And then
Yeah.
obviously there are the beneficiaries of Make in India and the engineering side. But again, there you have to be very careful because valuations exactly are not very cheap.
Absolutely. Mr. Singhania, we've just seen the earnings season more or less wrapping up too. What were your key highlights according to you, the big hits and misses? And, most sectors barring the IT did put up a good show there. So your thoughts post the earnings?
No, I think earnings by and large have been pretty decent. I think on the consumption front, we have seen some slowdown. That's a combination of two factors. One is on the urban consumption, the EMI is going up because of interest rate hikes, have reduced the disposable or the income which was available for spending. So I think we have seen some pressure there. On the rural side, there was this fear of El Nino, and I think what we hear is that the rural population wanted to conserve their savings because they were also scared about El Nino hitting them. However, monsoons in July have tended up well. August, there has been a breather, but I think the forecast is of a normal monsoon. Sowing is now 1% higher than the last year levels. So our view is that the concerns relating to agri produce has allayed to some extent. The only thing, we have this Adhik Maas, so all the festivals have got delayed by a month. So maybe the spending which normally comes in July, September might be spread over July, September as well as October, December. And that's the reason we are saying that the second half should be pretty better. In terms of other earnings, I think there were some sectors which got hit. We have chemicals and some of the other sectors which got hit because there was wide fluctuation in the input cost, and therefore there was some inventory losses as well as some demand degrowth also. There also in the next 6 months, our view is that three factors, which is raw material prices being much lower, energy prices being much lower, and freight costs being much lower, should act as a tailwind in terms of margin. And again, in those sectors, our view is the second half of FY24 and FY25 should be pretty decent. So yes, it's been sort of a mixed sector, but by and large, I think we have ended up growing at almost 20% as far as corporate earnings are concerned in this quarter so far.
All right. At this stage, Sunil, let's also bring in some viewer questions that had come in once we announced that you would be on the Market Masters show. And the first one is a question from Bikaner, Rakesh Binwara. And he has a specific question on PSU stocks. Rakesh asks, what factors are influencing the rally in PSU stocks? Is it the right time to add these stocks to a portfolio?
So, if you actually look at the history, PSU stocks have always, been disappointing. And that's largely because I think the general view and the way they were managed, it looked like an extended arm of government policies. So the outlook was a little bit murky. Return on equity was not in focus. Government policies were a little bit inconsistent, I think, but the current government has been very clear. They have allowed most of the PSUs to function like private sector companies. And in fact, the statement made by the Prime Minister a couple of days back also alluded to the fact that PSUs would be allowed to operate and compete generally. However, I've always been a little bit cautious. We do have some PSU stocks in our portfolio, predominantly on the banking side as well as on the power side, because these are really large companies. So, you have to be a little bit choosy. Just because a company is PSU, don't get very excited about it. At the same time, there are definitely good companies and available at very, very good valuations, which an investor can maybe, have a small portion of their portfolio invested in these.
Okay. Mrs. Singhania, the next question that we've got is from Kerala. S. Balchandra has sent this question for you. He wants to know from you, what works better for higher returns on investments, fundamental or technical analysis of shares and stocks? What would you say?
So, one has to decide whether they want income or wealth. By trading and by indulging in buying and selling based on non-fundamental perspective, you will basically, hopefully, have income. And I'm saying hopefully because, all the data points, are very clear that 95-97% of the traders lose money. If you want to create wealth over a period of time, then obviously you have to be an investor and a fundamental investor. And I always ask these questions. If you ask how many billionaires are there,
Yeah.
and that wealth made out of fundamental investing, you will have more than handful. And if you ask the same question of how many you would have turned billionaires based on trading and technicals, I don't know whether we'll be able to even name two or three. So I think it's very, very clear.
Okay. Before we go back to some broader questions, we'll take one more question, and this one is from Mumbai, Harsh Nagpal. And the question is, I think, connected to what was said by the Prime Minister, and Sunil, you spoke about that. Harsh wants to know, do you see defense sector as one of the best themes to invest in for the next decade?
I think defense as a segment has done really well. In fact, we missed it because we did not expect the kind of push which this sector would get from the government. It's been a tricky sector, and I think companies have done very well. The only one thing which I would like to caution here is that the valuations have just gone out of whack, and particularly some of the new companies which are getting listed, they are like getting listed at some crazy valuations for the size of the company and for the profit they make. The other thing is, these are long gestation, orders which even these companies get. So it's not going to be like a tomorrow or a day after tomorrow story. You have to be invested from a 4-5 years perspective. So I think while the sector is good, I will reiterate that just don't get carried away by the theme and the momentum. Just be very cautious about the valuations where you are investing.
Okay. Mr. Singhania, one more question from the viewers and then we'll get back to the macro questions. And this question is from Noida. Rishi Nigam has sent this question for you. And he wants to know from you, how can one really understand the right time to buy and sell the stocks?
I think our view is that always invest when you have savings, which you can put in from a 3-4 years perspective, and sell when you need that fund. See, in a growing economy like India, we keep on adding to our GDP. So it took us 60 years since independence, and we're talking very close to the Independence Day. 1947 to 2007, 60 years it took us to reach $1 trillion in economy. The next trillion happened in like less than 9. The third trillion happened roughly in like 6.5 years. So after 75 years of independence, we are like almost $3 trillion plus as far as economy is concerned. Now, there is no doubt in our minds that we would be like 6 or 7 in the next 6 to 8 years. And as long as you believe that, I think you should just be investing. And as I said, you should sell when you need the funds. In terms of individual stocks, obviously, if you are smart enough to pick stocks, then that call is left to the investor. But if you are a long-term investor in a pool of assets like mutual funds or otherwise, I think just keep on investing and redeem when you need the funds.
Redeem when you need the funds, that is perfect advice. Since we've been speaking about the outlook and how, like you said, India as a growing economy offers potential which is perhaps not available anywhere else in the advanced economies also. The question that I have for you is, from a trend basis, what's the next mega trend that, Sunil, you think makes sense to talk about? We have seen various trends. They stay for some time, they run out of steam also. What is, according to you, the next couple of mega trends that will find favor?
So Siddharth, you rightly said that, trends come and go. It's like fashion coming and going. And it's very, very tough to keep on jumping from one trend to another. I think in the markets we have seen like 2 months financials do well, then pharma do well, and then suddenly railways have started, and then defense comes, and so on and so forth. I think it's impossible to keep on jumping. I think the biggest trend I would say is having the faith that India is going to be double of its size in the next 6 to 8 years. I think that is the biggest trend, because that would ensure that you are consistently invested in the equity markets. I think as far as sectors are concerned, as you rightly said, they will keep on changing. But basic trends come from your own observation. So, financials obviously is going to be a long-term trend. I am very sure that this Make in India is a very strong trend, and manufacturing will pick up pace for sure. I mentioned to you earlier, I think discretionary consumption is going to be a mega trend.
Yep.
We are very, very small compared to every consumption product anywhere in the world. And we just have to look at what happened in the US or what happened in China to get a view of what might happen as far as various consumption products in India are concerned. So I think that again is going to be a big, big trend. But I would again reiterate that the biggest trend is Indian economy doubling. And I think that should ensure that you just stay invested.
Okay, stay invested. But if I have to ask you, Mr. Singhania, is there any one or two big risks to the Indian equities and the run up that we are seeing here? What would those be?
No, I think there are obviously risks. Without risk, there are no returns. But two, three things. One is I would just like to mention here that the big risks are always not anticipated. So if you look at the last 3, 4, 5 years also of the equity movements, the biggest drawdowns, the biggest fall came during COVID or during the Russia-Ukraine invasion or when Credit Suisse went belly up along with some other banks. I think all of them were not anticipated. Events or risks which are anticipated don't have too much of an impact on the market. So having said that, I think oil prices always continue to be a risk. Our view on oil is of a softer oil price, but due to some geopolitical event somewhere, if there is an issue, you might have a risk. Obviously, the ambition of China is always a risk in concerning Taiwan or some of the other countries. And we have an election coming up in 24, and before that we have a semi-final with 3 or 4 large states going in for election. So I think states we are not worried about, but general election, the consensus view is obviously the current government continuing for a third term. If for some reason, it's a 2-5% probability if that happens, which is not in line with what the market is expecting, then you have to be prepared for at least a temporary big drawdown.
Absolutely. And the last factor, I'm reminded of what happened in 2004. But since you spoke about domestic risk, Sunil, from an international point of view, what are the chances of a soft landing by early next year in the United States and the consequent spillover, if any, to developing markets?
In fact, Siddharth, we have a very non-consensus view, and our view is that in the next 6 months, the world is going to be a much better place than what we are looking at. So even in terms of inflation, I think the numbers which are coming for the last 6, 7, I would say, announcements, as far as US inflation is concerned, it's always surprised on the positive with inflation trending lower than what was expected. And, we are not some great economists. We are just, number analysts. So if the inflation index was 100 in June 21, the inflation index went to 130 by June 22 after the Russia-Ukraine issue. That has already come down to 115. So, actually, if you remove the home inflation in the US, we are already trending to a negative inflation year on year. So by just base effect, I think October, November, we should be trending lower than 3%, closer to the 2%, I would say, comfort zone as far as US Fed is concerned. And that basically makes us believe that by November, December, or early 24, in fact, we will start to hear murmurs of rate cuts rather than rate increases. The economy also has sort of stabilized. We are seeing signs of small inch up as far as US economy is concerned. So it stopped falling. And I think even Europe and their tourism is a big component of their GDP. We are hearing a great tourist season this time. And that should mean that it would lend some support to even the European economy overall, though manufacturing keeps on struggling. So our view is that, the world looks much better next 6 months than it was over the last 18 months. However, obviously, there's huge moves in currency and, some bond prices keep on creating disruptions now and then, or volatility. But we would be more constructive on the global economy than what we were over the last 18 months.
Okay, just as a comparison, Mr. Singhania, the US markets have in fact done better, than the Indian markets this year. The S&P 500 is up about 50%, Nasdaq up 40%. In comparison, we are just up about 7-8% odd this year. Do you think the rest of the year we can bridge that gap? Is that possible?
No, point to point is always, just playing with numbers. You just can't pick up from this date to this date. I think over the last 2-3 years, Indian markets have done very, very well. I think Nasdaq collapsed in the second half of 22, and therefore the rebound was equally sharp. I don't think we should take that that last 6 months Nasdaq has done 35% and Indian market has done 7%. So in the next 6 months we will do like 28% more. I don't think we should even think about it. You have to take periods which are rational rather than just point to point.
Okay, let's come to our viewer questions. Upahar Singh from Chandigarh. Should I invest in both mutual funds as well as direct equity individual stocks to have a better exposure in the portfolio?
I think mutual funds are the best instrument for retail investors. Very efficient. They're performing very well. You get access to the best investment brains in the country, and they're so well regulated and so liquid. Individual stocks, unless you think you are capable of analyzing so many companies on your own, or you have a large team the way the mutual funds have of analyzing company, I think you should stay away. So, if you want thrill, you invest directly. If you want to create wealth, I think mutual funds are the way to go.
Wow, that's a good one. If you want thrill, then you invest directly. But one question that's just come in from a viewer who is listening to what you have to say. Manvendra is asking from Noida, what is your view on the PVR stock? It's up 3% today and almost 20% this month. Is this the return of the business of Bollywood that's driving PVR?
So I don't, comment on individual stocks. But having said that, I am a big Bollywood fan, and I'm so happy that finally we have movies where we can go to the theater every week.
Did you watch Gadar over the weekend, Mr. Singhania?
No, I have back to back. Today is Oh My God and tomorrow is Gadar. So,
Oh, okay.
Okay.
That's
a good
wonderful.
one.
All right. One more question. Another stock specific question, but you can actually give us a larger sector view here. The question that we have is from Renu Arora from New Delhi. She wants to know the new age stocks like Zomato and Paytm have begun reporting profits. So is it a good time to invest in them for the long term?
So, my view has always been very clear here. So, hats off to the entrepreneurs who have created businesses out of nowhere. They have made our life so easy. We could have never imagined ordering from any restaurant anywhere at the click of a button, or paying 10, 20, 30 rupees with the ease of what some of these fintech companies are providing. However, I think these investments, till they mature in terms of their business model, are very apt for private equity kind of investors, or investors who want a slightly higher risk return, or who have faith in the business model from a 5-7 years perspective, because it will take them that long, and that also if they are successful in doing what they're doing, to generate profits where you can value these companies on the traditional price earnings or some of the other matrices. At Abacus, we are unfortunately very disciplined in terms of what we invest in. So, unless we have a profit-making company with return on capital employed or return on equity of more than 15%, we don't invest. So, while admiring these entrepreneurs for creating what they have created, I think for some value-conscious investors like us, we stay away from these companies.
Fair point. By popular demand, Sunil, I have been asked to ask you a question in Hindi, and that question has come from Bhuvan Pal, Indore से. इनका सवाल है भुवन का. What's मार्केट में वॉलेटिलिटी से बचने के लिए क्या करें? क्या इन्वेस्टर्स मार्केट में तब बने रहें जब मार्केट रेंज बाउंड है? That is the question that I have tried to ask on behalf of Bhuvan Pal from Indore.
तो आप भुवन जी, आप देखिए, मार्केट और वॉलेटिलिटी दे आर पार्टनर्स. अगर वॉलेटिलिटी नहीं होगी तो मार्केट नहीं होगा. एक कार्डियोग्राम के जैसा है. जब तक ऊपर नीचे का वो सिग्नल नहीं आता है ना, तब तक अपना हार्ट ठीक ठाक है, वो ऊपर नीचे होना ही चाहिए. बट वॉलेटिलिटी और रिस्क में बहुत फर्क है. जो आप रोज देखते हो वॉलेटिलिटी है, और रिस्क नहीं है. वो अगर आपका व्यू 3-4 साल का है तो वॉलेटिलिटी अपने आप कम हो जाती है. तो आई थिंक सबसे बेस्ट तरीका वॉलेटिलिटी से बचने का एक ही है कि आप रोज रोज और हर मिनट और हर घंटे प्राइस मूवमेंट देखना बंद करिए.
That's a good one. Sakshi, you want to take another question that we've got from Navi Mumbai?
जी
P. Krishnan.
जी बिल्कुल हमारे पास जो अगला सवाल आया है नवी मुंबई से है पी कृष्णन का सवाल है वो आपसे जानना चाहते हैं मिस्टर सिंघानिया कि क्या एक अच्छा टाइम होता है कुछ अच्छा आइडिया होता है पोर्टफोलियो जो टॉप इन्वेस्टर्स होते हैं जैसे आप हैं मिस्टर राकेश झुनझुनवाला थे उन लोगों के जो पोर्टफोलियोज हैं उनको इमिटेट करना क्या एक अच्छा आइडिया रहता है किसी भी नए इन्वेस्टर के लिए?
तो राकेश भैया को नमन, उनका बर्थडे मानी उनके 1 साल हो गए उनको हमारे बीच से फिजिकली गए हुए, मेंटली तो हमारे साथ हरदम रहेंगे वो। सी इन्वेस्टर के लिए अलग अलग स्ट्रैटेजीज होती है। काफी लोगों को, जैसे मैंने कहा, उनको खुद इन्वेस्ट करने का एक बोलते हैं ना बहुत बड़ा थ्रिल होता है। तो ऑब्वियसली अगर आप अच्छे इन्वेस्टर को फॉलो करेंगे तो एक आपको एक कॉन्फिडेंस ये रहता है कि अगर कोई अच्छे इन्वेस्टर ने कोई शेयर में इन्वेस्ट किया है तो उन्होंने फंडामेंटली उसको पक्का नाप तोल के ही इन्वेस्ट किया होगा। लेकिन एक बात हरदम याद रखिए, हम जैसे इन्वेस्टर हम लेते हैं, हम भी गलती करते हैं। और ऐसा हो सकता है कि हमने जब लिया तब आपको पता चल गया, हमने बेचा तभी आपको पता भी नहीं चला। तो आई थिंक इट इज नॉट ऑलवेज गोइंग टू बी वर्किंग फॉर यू। इससे अच्छा मैं आपको ये कहूंगा कि कोई अच्छा इन्वेस्टर है और कोई फंड चला रहा है तो उसके फंड में इन्वेस्ट कर दीजिए रादर देन ट्राइंग टू इमिटेट। बट कोई अच्छे इन्वेस्टर ने शेयर लिया है तो मोर ऑफन देन नॉट वो रिसर्च करके ही लिया होगा, तो उतना आपको कॉन्फिडेंस मिल जाता है उससे।
बिल्कुल, बहुत बढ़िया जवाब कि खरीदते टाइम तो हेडलाइन बनती है बट बेचते टाइम किसी को खबर नहीं रहती है और इस कारण जो निवेशक है वो कंप्लीटली मिरर नहीं कर सकता है। आप चक्रव्यूह में घुस सकते हैं बट बाहर निकलने की आपको स्ट्रेटजी नहीं पता रहती। एक सवाल और है सुनील जी, विनय सिंघल हैं लखनऊ से और इनका सवाल है कि क्या स्टॉक को खरीद के मैं बाय एंड फॉरगेट कर सकता हूं क्या? अगर मैं 20 साल के लिए मान लीजिए खरीद के छोड़ दिया, और कई लोग वैसे सुनील जी ये कहते भी हैं कि आपने स्टॉक खरीदा है बार बार मत चेक करो उसको, पड़े रहने दो, ऑटोमेटिकली रिटर्न देगा। तो इस पे कैसे इसको अप्रोच करना चाहिए?
नहीं, आपने जो कहा वो ट्रेडिशनली बहुत सही था कि आप अच्छी कंपनी खरीद के छोड़ दो 20-30 साल के लिए। लेकिन अभी सिद्धार्थ है ना, वर्ल्ड बहुत डायनेमिक हो गया है।
करेक्ट।
और अपना बिजनेस मॉडल भी बहुत डायनेमिक हो गया है। और उसको रहते हुए साइकिल्स थोड़ी शॉर्ट हो गई है। जैसे आपने डिस्कस किया से जोमेटो, अभी जोमेटो के आने से पूरा रेस्टोरेंट बिजनेस एक चेंज हो गया है, एक डिसरप्ट हो गया है। वैसे काफी बिजनेसेस आएंगे जो ट्रेडिशनल बिजनेसेस को डिसरप्ट कर देंगे। जैसे न्यूज़पेपर थे, पहले सब न्यूज़पेपर पढ़ते थे, आजकल सब डिजिटल प्लेटफॉर्म पे चले जाते हैं। पहले सबकी गाड़ियां डीजल और पेट्रोल पे चलती थी, आजकल सब ईवी पे चलती है। इसके लिए टेस्ला ने ज्यादा पैसा बनाया है, मर्सिडीज और बीएमडब्ल्यू के वैल्यूएशंस काफी कम हो गए। तो आई थिंक डिसरप्शंस अभी हमारे लाइफ में कंटिन्यूज आते रहेंगे। इसके लिए आप कोई भी शेयर जो आपके पोर्टफोलियो में है उसको पीरियोडिकली आपको असेस करना चाहिए कि कोई डिसरप्शन के वजह से उसका बिजनेस तो गड़बड़ा नहीं जाएगा, बंद भी हो सकता है, कम से कम इफेक्ट तो आएगा। तो आई थिंक अभी जो 20-30 साल के लिए हम खरीद के भूल जाते थे, मे बी दैट माइट नॉट वर्क नाउ।
Okay, Mr. Singhania, let's get back to the macro questions then, and we will just circle back to some of the questions if we get them live on the show as well. The question that I have for you is in continuation to what you were discussing in terms of the preference of investors to Indian markets. You've been discussing this, the idea with a lot of foreign investors as well. We've seen their return into the Indian market, but how do you see the flows really panning out? And versus China, how do you see this playing out, especially if we see a recovery coming in China as well?
So, Sakshi, I've been traveling a lot overseas also, been to US, Europe, Middle East. We have also got some good mandates from overseas. And, at least my personal, experience and, what I see after meeting some of these asset allocators is that money flow into India is going to be huge. Obviously, a lot of investors also believe that there might be a small correction. So I think on the correction, you will see huge flows coming into the country, which we are already seeing. Just to give you some data point, I think India has some $650-700 billion invested by foreign investors in the listed space. China is almost 5x of that, $3.5 trillion. And the 10-year return for China in dollar terms is
Put on
negative
WhatsApp.
15%. Absolute. India is more than doubled. And I think that is now clearly getting visible. So we are very hopeful and quite optimistic that this dragon to elephant, which I mentioned earlier, in terms of asset allocation, is also going to happen. So our view is that from here on, at least for the next 3-4 years, we are seeing decent foreign flows on a net basis coming into the country, both on an FPI as well as FDI basis.
Okay, Sunil, as we speak, we are getting more questions, and I will try and take that as it comes. But a quick one, yes, we have the question. We've got a viewer question which says, सुनील जी क्या वेदांता में फ्रेश बाइंग कर सकते हैं क्या?
I'll again request, please don't ask me stock specific questions. I will be able to answer.
व्यूअर्स, आप जो लोग सवाल भेज रहे हैं, सुनील जी ने कई बारी बोला इंडिविजुअल स्टॉक्स पे बात नहीं कर सकते हैं, इसलिए वैसे क्वेश्चंस हम अनफॉर्चुनेटली आपके साथ यहाँ पे व्यूअर्स डिस्कस नहीं कर पाएंगे. लेट मी कम टू द अदर क्वेश्चन दैट वी हैड, आई थिंक यू just mentioned it briefly, but the question really is about the performance of small and mid caps. Is the recent outperformance likely to continue?
So, see, small caps and mid caps, they get classified as one bucket. However, like small cap index comprises of 300, 400 companies. So obviously, I would say a lot of them are in a over exuberance kind of a zone and trading at significantly higher prices than fundamentally what is deserved. Whether it is because of some theme or because there is some, more buying than selling or whatever. And I think one has to be very careful. However, I think over a period of time, the smaller companies tend to grow faster and therefore they tend to perform better. However, from an investor's perspective, proper asset allocation is very, very necessary. Large caps, we have great large cap companies. They will give you stability and they will give you return. Smaller companies will give you higher returns, but will also come with a lot of ups and downs. So I think proper allocation is very important, and I would say that a balanced portfolio is what is needed. Also, don't get carried away when stocks are doing well and just jump onto it because there is momentum. I think a lot of investors make the mistake of buying these small and mid caps at the wrong time when they are, just going in a very different zone because of momentum. So the best time to invest in mid caps and small caps is when there is less euphoria. So I would say that if you're looking at that segment individually or in particular, maybe, you can either space it out or you can wait a while.
Right. Mr. Singhania, very interestingly, we have the data from PMS Bazaar that actually shows us that your firm, Abacus Investment Managers Emerging Opportunities Fund, has actually given a 12.6% return in July, and that's topped the small cap and the multi-cap strategies of the portfolio management services firms. So in this 1 year, this strategy has also given a whopping 43% kind of a return to investors. Help us understand what worked for you here, or what strategy did you follow in choosing the stocks here, and what's the outlook?
First of all, a disclaimer: please don't look at these returns and expect these returns going forward. Because these are point-to-point returns. Okay. I don't think these kind of returns can continue forever, because then all of us would be the richest people in the world. Having said that, I think, we have a very disciplined approach. As I said, we don't invest in loss-making companies. So 3 things we look at. One is return on capital employed / return on equity of at least 14-15% and above. We look at companies doubling their profits maybe in 4 years, but a maximum of 5 years. So profit growth of anywhere between 14 to 18%. And visible price earning multiple of less than 15 times, which is difficult, but we have been able to manage. And I think that discipline obviously makes us make less mistakes. So at the portfolio level, it's a combination of picking good stocks, but also importantly, making less mistakes. And I would say that has so far worked for us. But I'll again repeat that this 12.6% 1 month return and 43% 1 year returns are not going to be replicated forever. So please don't look at those returns and have expectations going forward.
Well, that's a very important point that you made here, Sunil Singhania, as well as telling us about the discipline, which I think in some ways is really the secret sauce behind what you do and your career in the markets, which all of us have tracked and admired. Sunil Singhania, thank you very much for your time with us today on this episode of Market Masters Live on Business Today Television. We'll be back with more viewers. We took almost 10-11 questions, and I know there are more, but we'll leave that for some other time. For now, once again, thank you very much from me here in the BTTV studios along with my colleague Sakshi Batra. Goodbye.
Hello and welcome. You're watching BTTV. I'm Tanya Neja. Well, it's the earnings season and the company on our